Hey everyone, welcome back to the channel. Today, we're diving deep into the latest developments surrounding NIO, the broader market, and some key tickers like SPY, QQQ, and more. We've got some crucial data coming out tomorrow that could significantly impact the Federal Reserve's policies, and in turn, the entire market. So, this is something you'll definitely want to keep an eye on. But before we jump into the nitty-gritty details, let me just say upfront that I am not a financial planner, so nothing I say should be taken as financial advice. I'm just sharing my thoughts and analysis, and I highly encourage you to do your own research before making any investment decisions. And hey, if you enjoy this content, please smash that like button. It not only helps me out but also benefits the entire NIO community as a whole. Now, let's get into it. First up, let's talk about NIO. We're seeing a rather intriguing inverse pattern forming on the charts right now. The share price is beginning to gather some bullish momentum, and the big question is, can this continue as we move into tomorrow? A lot of that will depend on the Consumer Price Index (CPI) data and several other key factors. From a technical standpoint, NIO does appear to be in a bullish setup as we head into the week. The charts are leaning bullish, not just for NIO, but for SPY and the broader market as well. However, whether these technical indicators are truly predictive will largely depend on the CPI data. Right now, the charts are suggesting that there's a decent probability of upside in the market as we go into tomorrow. Now, I'm going to break down all of these charts in just a moment. But first, let's talk about the economic data we've seen today. We had the Producer Price Index (PPI) report come out, and everything was below expectations. Specifically, the PPI month-over-month came in at 0.1% below expectations, and the core month-over-month came in at 0%, which was also below expectations. The market reacted positively to this, which is a good sign for inflation heading into tomorrow. And just so you know, tomorrow is Wednesday, August 14th, 2024. And that's when we're getting the CPI data report. So, what are we expecting from the CPI data? Well, we're looking for the core CPI month-over-month to come in at around 0.2% to 0.3%, which is slightly higher than what we saw in the previous report. For the year-over-year data, we're expecting the core CPI to be around 3.2% to 3.3%, similar to the last report. As for the overall CPI month-over-month, we're expecting it to come in at around 0.2%, which is a bit higher than the previous month. For the year-over-year CPI, we're looking at a range of 2.9% to 3%, which again is pretty close to what we saw before. Essentially, we're expecting the data to be fairly similar to the previous reports, with maybe some slight increases in certain areas. Given these somewhat elevated expectations, there's a good chance that the CPI data will align with these forecasts, if not come in slightly below them. That would be a positive sign for the markets. It's also worth noting that the trend for CPI has been downward recently. This means that while prices are still increasing, they're doing so at a slower rate. However, I want to emphasize that this doesn't mean prices are going down, just that the rate of increase is slowing. CPI is a highly manipulated metric, so take it with a grain of salt, but based on the data we have, it doesn't look too bad. Now, let's shift gears a bit and talk about earnings. There's nothing too crazy coming out right now in terms of earnings reports, but I do want to mention a few things. Tomorrow, we have companies like Dole and Cisco reporting, and then on Thursday, we have Alibaba and Walmart. These could be interesting to watch, especially for anyone invested in the retail sector. Speaking of the retail sector, gas prices have remained relatively stable, with only a slight increase of about $0.03 in July compared to June. This stability is a good sign for CPI, as any significant increase in gas prices would likely push CPI higher. Crude futures also saw a slight uptick, but again, not enough to have a major impact on the PPI data we saw today. Overall, the data was decent, and there's a good chance that tomorrow's CPI report will be decent as well. Now, let's talk about the Federal Reserve and what the market is currently pricing in. There's about a 54% chance that we'll see a 25 or 50 basis point rate cut from the Fed, and a 46% chance that we'll see a 25 basis point cut. So, we're kind of in the middle right now, but the market is leaning a bit more towards a 50 basis point cut, especially if we get a favorable CPI report tomorrow. Switching gears again, there's some geopolitical news worth mentioning. We're seeing a lot of tension between Iran and Israel, and there's concern that this could escalate into something more serious. If that happens, it could throw a wrench into all of our technical analysis, as any major geopolitical event could cause a significant drop in the markets. But for now, it doesn't look like that's going to happen, so let's hope it stays that way. On a more positive note, NIO sales are on the rise. We're talking about a 44% growth so far this year, which is really impressive. This growth is largely due to the strong demand for electric vehicles, and NIO is capitalizing on this trend. In July alone, NIO delivered about 108K vehicles, which puts them ahead of competitors like XPeng. This 44% increase is getting a lot of recognition, and it's clear that NIO is prioritizing its sales efforts to improve margins and overall profitability. NIO is also being smart about not overextending itself into other areas like AI, instead focusing on what they do best, making and selling electric vehicles. Their volume is slightly below average right now, with about 29 million in volume, and short volume is also going down. Bank of America Securities has given NIO a neutral rating, and we're seeing a slight dip in the price ratio as well. But overall, things are looking pretty good for NIO. Now, let's get back to the charts and talk about some key technical levels to watch. NIO is currently forming an inverse head and shoulders pattern, which is typically a bullish indicator. There's an imbalance in the price around the $4 level, and this imbalance is likely to draw the price towards $4 in the near term. However, if we lose the $3.83 level, we could see a dip back down to $3.75. But for now, the chart is still favoring a move towards $4, so I'm leaning bullish on NIO. Of course, as always, it's important to be cautious and keep an eye on the charts. Moving on to SPY, we're also looking bullish here. If we can break above the 542 level, we're likely to see a move up to 544. And if we can break that level, we could easily see a move all the way up to the resistance at 548. So, keep an eye on those resistance levels 542, 544, and 548. There's a good chance we'll continue to push upwards if we can break these levels. On the downside, if we break down below 538, we're looking at key support around 535. If that level fails, we could see a move lower, but for now, the chart is leaning bullish. Let's take a look at some other key tickers as well. Starting with QQQ, we're currently hovering around resistance at 54.56. If we can break above this level, we're likely to see a move towards 5,500. However, if we reject at this level, we could see a dip back down towards the lower 5,400. But overall, the chart is still favoring upside. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.